Hey, according to the folks at Zillow and Redfin, home prices have absolutely skyrocketed since 2019. They're up almost 50%. So while prices have not crashed in the housing market, I'm going to show you three areas of the housing market that have crashed and still are crashing. And we're going to try to find out why this housing crash and housing market is so darn weird. All right, so the first reason why the housing market's so darn weird is the number of sales. Yeah, prices have not crashed in the housing market, but sales have certainly crashed. Check this out. This chart shows the annual number of home sales since 1981. And you can see the year we had last year and this year is really, really bad. So in 2023, we had just under 4 million home sales. And this year, it's actually flat to some degree, but also it's trending lower than last year. We're actually on pace to sell less homes this year than we did last year when we had one of the worst years of home sales in 20 years. A major reason for the low number of home sales is the lock-in effect, which is simply the fact that many current homeowners are reluctant to give up their low interest rates and low home prices to move up into a much bigger or nicer home. Why do that when your interest rate is low, maybe under 3%, and you bought a home 10 years ago before prices went crazy? Put simply, many homeowners don't have the incentive right now to move up. So there's lower transactions. Simple as that. And again, while home prices have not crashed, the crash in transactions is definitely felt this time around by people in the industry. Folks like me as a realtor depend on transactions in order to make a living. So when there's lower transactions, there's obviously going to be lower earnings. Not only that, but mortgage companies and title companies are suffering too. So the crash is real for people in the industry like me. So the second weird thing about this housing crash is the inventory. Again, prices have not crashed, but inventory has certainly crashed. To illustrate my point, I'm pulling up Realtor.com raw data as presented by Resi Club Analytics. And this shows you the percentage of change from one period to another time period in the number of homes available to purchase or active inventory. So you can see right off the bat. So what should jump out to you immediately is this number right here. The number of homes available to purchase right now is 29% less than it was in 2019. So a lot fewer homes to choose from for home buyers. The good news is we're up 36% year over year compared to last year, but we're still almost 30% below pre-pandemic levels. But that's not the worst part. This is. So I'm going back to the National Association of Realtors to take a look at the home sales by price bucket. And this is going to show us what's really wrong with the inventory and how it really has crashed. Again, prices haven't crashed, inventory has. So this shows you the percentage of change for home sales by price bucket. Now, for under $100,000 homes, the percentage is down over 15%. So inexpensive homes under 100 grand, we're actually selling over 15% fewer homes than last year. The number of homes sold from 100 to 250,000, that's down at least 5%. Now, we don't really see growth until we get to $250,000 to $500,000 homes. We see a slight growth and then a lot of growth in expensive homes. But remember, the median price is anywhere from 300 to 400 grand, depending on what you're looking at nationally. And in a lot of areas, it's a lot lower than that. Now we've looked at the home sales by price bucket. Now look at the inventory. This is scary. So now we're looking at not at sales, but the inventory of existing homes for sale, the houses available to purchase. And remember, the inventory has crashed. So under $100,000 homes, the most inexpensive homes, those are down over 10% year over year in inventory. Look at the $100,000 to $250,000 homes. They're only up 12%. You got to remember where we came from. We're down 29% versus 5 years ago overall for all price buckets combined. But the least expensive homes on the market, that inventory has struggled significantly. You don't really see a lot of growth in inventory until you get to $250,000 to $500,000 homes. And no surprise, over $1 million homes those are up a good amount. No surprise, over $1 million homes, they're up over 25% year over year in active inventory. The lock-in effect is plain as day when you look at this chart. Why? Because you can see the inexpensive homes are not hitting the market. People are hanging on to them rather than moving up into the more expensive homes that are obviously more plentiful and have a bigger inventory amount. So the lock-in effect is real, and you can see it on this chart because it's clear as day. The number of inexpensive homes available to purchase is low because people aren't giving them up to trade up into the more expensive homes. Pretty simple. So again, weird market, right? You've got cheap homes that are not hitting the market and people are hanging on to. You've got expensive homes that are on the market and people are just ignoring them. And if that inventory isn't weird enough, look at this. Look at the number of new listings. Again, I'm using Realtor.com and Resi Club Analytics. And you can see we're still down 24% in terms of new listings because you have to have new listings to actually grow inventory. We're up 3.6% year over year, only up 3.6%, meaning there aren't that many new listings compared to last year hitting the market. Again, you need more new listings to drive up inventory and lower prices. And this is the scariest part of the new listing area. We're down nearly 8% month over month when you look at June compared to July of 2024. We're not gaining ground with new listings. We're losing it. Again, weird. So the number 3 reason why the market is so weird right now is that cash flow has crashed. So prices haven't crashed in the last 5 years, but cash flow for investors certainly has. So cash flow is basically driven by your revenue or rents if you're a landlord minus all your expenses equals your cash flow. Pretty simple, right? But there are several areas, actually 4 areas, where expenses have absolutely skyrocketed and rent has gone up too, but not at the pace of expenses for most landlords. The 4 areas are pretty obvious. You've got taxes, you've got insurance, you got maintenance, and you have interest rates. That's 5. It's actually only 4. But still, you have 4 areas of expenses that have shot up. And I'm a landlord. I own rental properties, and this is 100% accurate. You can really get into trouble if you don't watch what you're doing and if you don't raise rent consistently. I'm going to show you a survey right now that Resi Club put together in terms of investors and how they look at expenses and what they're experiencing. This is pretty telling. So this pie chart represents the expense single-family rental investors say increased the most over the last 12 months. I actually participated in this survey, and you can see the biggest chunk is insurance premiums. Over 50% of the survey respondents said that insurance increased the most out of all their expenses. Property taxes was second. No surprise, I would agree with that. And number 3 is maintenance and repairs. Now, one thing they don't list on here is interest rates, but that can be a killer. A lot of landlords have variable rate debt. I have some properties with variable rate debt. I can tell you, if your interest rate increases dramatically, like it has over the past few years, then your bottom line will shrink and actually flip and go negative if you're not careful. So when you buy a property as an investor and a landlord, you better make darn sure if you don't have fixed rate debt, you plan for the worst case scenario before you close on that property. Meaning, don't anticipate you're going to be able to raise rents consistently 10% each year, which is crazy to do anyway. You need to have a normal nominal rent increase like 3%, 5% every year. But I think the other issue that investors are facing and why cash flow has crashed so much is that a lot of landlords historically that I run into don't raise rent enough. They're too nice about it. They think, well, I'm just going to leave my tenant in the place, in the building. I'm not going to raise rent because I don't want to ruffle any feathers. But what happens when that house or that building needs a new roof or needs more electrical work or your interest rate increases? All of a sudden, you can't afford to fix the roof. You can't afford to fix the electric or the plumbing or whatever's wrong. And the tenant ends up living in subpar conditions or the landlord has to dump the property. Then a new person comes in and jacks rent up immediately. Wrong strategy. You want to increase it along with the cost of inflation. You don't need to jack rents up 10, 15, 20% a year. You need to raise them like most people would expect. When I was 18 years old, moved out, and got an apartment, every year I got a rent increase. It wasn't 10%, but I knew it was coming and it always did. So again, prices have not crashed, but cash flow has. And that's the third reason why the market's so darn weird. As you can see, we're right in the throes of a weird housing market crash. And the question remaining is, hey, will prices follow? Will prices eventually crash? Well, check out this video right here where I break that down. Watch it now.